Have an opportunity, a stock, a crypto, a real estate deal, anything that you're looking at right now that has 300 to 700% upside. If you do, drop it in the chat below. I'm looking for some alpha. And I'm going to present to you the case here why I think you got a crash for XRP before a 300 to 700% upside rally. And it's one that I am not going to be missing. And so we're going to break down the crash here. No doubt about it. It's a technical bear market. It definitely is a crash. And it's been brutal for a lot of us, right? But for some of us, we've been leaning into this opportunity because we see what happens on the bounce. So if you have other opportunities, let me know in the comments down below. I'm going to be reading all of your comments. But here it is, the XRP crash update coming to you June 3rd, 2026. XRP drops down 69, about 70%, right? From $3.66 all the way down here to $1.12. And as we trade here at about $1.22, right, we're still down about 66% from that all-time high last year. That's brutal. That's rough. But I'm going to show you why we're sticking around and why I just added more. And I bought more XRP yesterday. You better believe it. Let's go. I'm also still in an oil long that is very well in profit right now. The setup is pretty clean. A little bit of manipulation to suppress oil, but I don't think that this can last much longer. Crude, gasoline, distillates, Cushing, just a huge strategic petroleum reserve drawdown again. This is after Japan just had their largest SPR drawdown ever. We're reaching the bottom of the reserves for a lot of countries. And so the issues that we're facing now haven't been too drastic other than a little bit higher prices at the pump. But the shortages have already started to hit some other countries. And if the Strait of Hormuz remains closed, and President Trump actually just said in an interview that we should have it opened up, the blockade, by Labor Day. So that's quite some time, and that's going to be causing some issues. We'll be watching that. I'm in an oil long right now, and it is deep into profit as we trade just below $96 per barrel. My entry was at $89.71 last week, so that trade is doing fantastic. What's not doing fantastic is the private credit funds. And we're even going to show you there's a private equity fund as well, too. And we're watching this ripple effect since the 1010 liquidation has also hit the hedge funds in the crypto space as well, too. Right, so these private funds are getting hit with a bunch of redemptions. A lot of them, by design, will gate redemptions at 5% or 10%. So this is to be expected, but it definitely isn't easing anybody's feelings of anxiety, and it definitely isn't slowing down. In fact, the redemptions are actually picking up. Let's show you here. This article from Bloomberg hit this morning. Cliffwater Private Credit Fund stung by 17% redemption requests. So another one, their flagship private credit fund capped redemptions at 5% in the second quarter after investors looked to pull out 17% of shares. Now, this is the same Cliffwater that already had big redemptions in Q1, and now they're getting hit with it again here in Q2. And we're going to get more data coming in. Other non-traded business development companies are set to report the results of their second quarter tender offers in the coming weeks. We got Blackstone. They went to extraordinary lengths to let investors cash out. They even, injected their own cash into the deal to keep that one running and basically to get investors their money out. While other funds at Apollo, BlackRock, and Blue Owl enforced their 5% caps on their redemption. So this is not just small operators. This is the biggest operators in the space, the biggest fund managers in the world. And the reason why this has been just terrible for crypto is that it, came into the crypto space as well, too, with big hedge funds in the crypto space also having forced liquidations and also, forcing bigger drawdowns in the crypto space because they've had to unwind those positions. Now, we've been talking about private credit, but you have the first private equity fund to gate investors as well, too. So this is Partners Group Holding AG has capped withdrawals at one of its evergreen private equity funds amid heightened redemption pressure. So I'm going to scroll on down because I want to show you guys this. First, I'll read off their quote. They believe that redemption limitations are an indispensable feature of private markets investing to protect long-term investors in an inherently illiquid asset class. Acting in the best interest of all investors in an evergreen fund means balancing the needs of those seeking liquidity while preserving investment capital for long-term investors who want to capitalize on market opportunities. I appreciate the framing it up, investors who need liquidity. How about investors that are just scared to death? How about investors that are looking at the fund performance and it's just been terrible, right? And there's heightened concerns and they just want out, So they can frame it up however they want. This isn't stopping anytime soon. And I don't think that we've seen the worst of this crisis yet. But I wanted to show you guys this one right here. Down at the bottom. The gating by Partners Group comes despite the fund's liquidity standing around 15% of net asset value. Okay, that's great. They have cash on hand. They can pay investors. And in addition, the fund has access to an undrawn credit facility equal to 15% of the fund size. Now, this is supposed to give us some, confidence, right? And to me, and maybe some of you are asking the question, well, who's setting up that private credit facility, right? That's another credit fund. That's somebody else lending money to somebody who's already struggling to meet liquidity demands, right? And you start to see how this is all interconnected. A fund of funds is lending money here and there, and we all hold each other up, right, in this space. And they all, and note that from Apollo, Blackstone, they were all saying the same things. Yes, there's some concerns. Yes, there's some issues. This is going to blow over. It was like the Fed telling us that inflation was going to be transitory. I'm here to tell you that that's not the case. I think that we're going to see more. And it's one of the reasons why crypto's drawn down so much as well. The same issues that are happening in the private credit, private equity funds are happening in private crypto hedge funds as well, too, and private funds for crypto as well. So stay safe out there. The liquidity crisis is real. And there is no answer or solution coming in the near future. Into crypto. Today we're sending a letter to Senate Majority Leader Thune. This is from the Blockchain Association, 160 former national security, intelligence, and law enforcement professionals supporting the Clarity Act. It's on the way. Ripple, perfectly positioned, expanding their D.C. office. Absolutely love to see it with Stuart Alderati there and the rest of the team from Ripple. Expanding the presence in D.C. They've already been there. They never left, despite our own government attacking us. And we're about to reap the benefits of holding strong and holding the line. This is SBI CEO Yoshitaka Kitao. Although the cryptocurrency market is declining overall, the reason is believed to be that institutional investors and others are raising funds for acquiring shares in 3 major upcoming IPOs of SpaceX, Anthropic, and OpenAI, which are successfully scheduled in the United States in the future. From a fundamental perspective, there are no concerns whatsoever, and I am convinced that if Clarity Act is enacted in the United States, it will bring a positive impact to the cryptocurrency market, including Ripple. So I'm going to be doing a video on these IPOs and how I think it could create some problems. And this has become a topic here in the past few weeks as this has drawn more attention. You have these 3 large IPOs, which are literally, soaking up a lot of liquidity right now. SBI, Yoshitaka Kitao, commenting on this, saying the word on the street, right, is that institutions and others are raising funds right now to participate in those IPOs, and it's drawing liquidity, maybe drawing liquidity out of Bitcoin and the crypto market as well, too, right? A lot of these, and we've seen the outflows from the Bitcoin and Ethereum ETFs, not so much the XRP ETFs, which is an important data point, but they're pulling money out of Bitcoin, Ethereum, and folks are getting that cash ready. So if they haven't already gotten exposure to those 3 companies that will be going public, they can get some before they do. But I think that that's going to cause some issues. There's talks of the SpaceX being able to merge into the index sooner than the 90-day window that typically it takes for a company to get into the S&P 500. What that means is that passive investing, 401ks, etc., they'll be forced to buy the SpaceX IPO and basically top blast that chart, which is always historically one of the worst times to buy a stock is right after they go public and IPO. So that could cause some issues. We'll be breaking that down in a separate video. Stay tuned for that. But once again, this is the point, guys. Macro issues with the Iran conflict and oil, private credit issues, private equity issues, right? These private funds having some concerns in the stock market, right? Getting a little toppy, getting a little frothy. The AI revolving door of liquidity. I lend money to you to buy your product, and I scratch your back, you scratch mine. It's all good. We all pump it. We're all friends. That stories where people are starting to poke some holes in that story. In crypto, though, the fundamentals get stronger every single day, and every single day we're getting hit with headlines of banks and institutions that are moving on their crypto strategy. Bank of America appoints one of its top trading executives as global head of digital asset transformation to lead its crypto strategy. This is coming out every single day right now. Evernorth. For everyone who's wondering when real banks will use blockchain, they already are. The next 18 months will be about how much on which chains under which set of rules. It's happening now. And they give the example of the digital euro that's been put onto the XRP ledger by Societe Generale, one of Europe's largest banks. And so, another prime example. MasterCard steps in today, announcing plans to expand settlement capabilities to include stablecoin, intraday, holiday, and weekend options, giving partners more choice in how and when transactions are settled. And that's going to include USDC, Paxos, PayPal stablecoin, and ROUSD from